Hey guys, so I'm just gonna make a really quick video. Some of you guys that are still confused on POIs and how to identify which ones are actually high probability POI, just remember, and you can keep watching those videos where I talk about each liquidity model, but I do explain in those videos the importance of POIs and finding which ones are high probability based on liquidity, right? So just remember that a POI can literally be anything. Okay, I'm not trying to trade. I'm not trying to change the way that you guys trade. I'm just trying to add clarity. I'm trying to add confidence in that with understanding liquidity from my perspective. Okay, so just remember that if you guys trade a completely different way, I'm not trying to change that at all because I know very well that you guys are all seasoned traders, and at this point, you've already built habits, you've built a personal way of looking at the market, and that's 100% fine. So, whether you look at the market as supply and demand, or you trade SMC and you're looking at the market like as imbalances, OBs, fair value gaps, any of that, or if you're looking at the market as a regular support and resistance trader, you trade, trend lines and break and retests, or even just simply zones. Okay, so just remember that a POY is technically just a zone. Okay, it's a zone area that you're waiting for or you're looking at for price to react to. Now, how do we know uh, what zones are actually high probability? So like I've talked about in the liquidity model videos, is that you need to pay attention to how liquidity is building up in live market. Okay, so this strategy is not going to tell you 100% when to get into the market, or it's not going to tell you 100% on which POI is high probability. Now that is going to be up to you as a trader and paying attention to price action, making the right judgment call as a trader in order to get in, whether or not you want to risk a position or not. Okay, so we have to also remember that, guys. We have to remember that being a trader is how we react to the market. Now we're only given so much knowledge on the market. We can't predict the market. So stop trying to predict the market with trying to think that there you have to take an entry at a certain area. You don't need to take an entry at a certain area. An entry does it has rules and contexts in place, but for you to actually take or pull the trigger to get into a position is a judgment call on you as an individual trader. So just please understand that this is not telling you I'm not telling you guys exactly when to get in, and I'm not telling you guys you need to get in when it does this. Okay, there's many confluences and contexts and narratives that you need to build yourself within the market, because the way that I take an entry may not necessarily work, or you may not see it the same way for you to take the entry. You might want to wait and be a little bit more patient than me, or you might want to be a little bit more aggressive and you might want to just get in right away, right? But my job is to just help you guys build that confidence with understanding how liquidity moves and how we can use that to our advantage in the market, no matter what strategy or style that you're trading with. So just so that we have a visual idea of what POIs are, you can literally, it can also just be a strong low or a strong high. So just marking these areas, like this right here could be a POI. This small area could be a POI. This could be a POI. Right here. Right here's a better one. Right here. Okay, so you notice the areas that I'm marking, right, guys? Like those are simply just high or low swing positions, right? They're just a high or a low. And when we're looking at it, they could be a supply demand, they could be an OB, however you want to look at it. But these are literally just zone areas, okay? So I'm going to try to find a quick example on maybe a high probability POI. Let's see if we can find something. Now it's going to be in hindsight, guys. And then also know that some of you guys were also requesting maybe like a live back testing. And the thing is, if you already, if you follow me on Twitter, I've already talked about this, but I actually stopped back testing for a little over a year now. And the reason why I do that is because um, I prefer forward testing. So back testing is definitely helpful, and you can still do it. When you're switching your strategies and you're trying to find something a little bit more solid and build your confidence in your trading. But once you've already built that and you're really just looking for consistency in terms of following your rules and staying disciplined, I don't think that there's like I don't think it's necessary for you to continue to backtest. You just need to forward test at this point. Backtesting is helpful when you're starting a new system or strategy, like I said, but moving forward, I would prefer you forward test, or even if you want to just look at the markets like this in hindsight, it's better to do that. That way you understand why every single move is actually happening. So I'm trying to find something. Trying to find like a pretty clear textbook example that would work. Maybe this might work. Hope this works. Okay, let's see. I want to see how it looks in the lower time frame. Okay. Maybe it might look clearer on the 5. I'm trying to think because I know that the 1 minute is choppy, so I don't really want to confuse you guys even more if the 1 minute is too choppy. Okay. Yeah, I guess we can use this. Alrighty, so we have our low and our high right here of our trading range. So let's just mark this up. High and low. Okay, so we have our high on our low. Okay, so clear liquidity, create our high, clear liquidity, create our low, right? So now we have a trading range. So let's just look at this and see, okay, clearly we know that we're bearish because of the trend right here. And this is just basing it off of this 5 minute alone. We're not going to look at the higher time frames because that's not the point of this video. The point of this video is to show what areas are actually high probable. Okay, so I'm going to delete, let's see. Let's do the bar replay. Oh, actually, we can skip. Okay. Okay. Now, so let's look at this. Okay. So we already see a weak high being formed. Okay. So we know that this is a weak high because this did not break this. Okay, this high did not break this structure, meaning that it is a weak high. Even though we cleared liquidity here, clearly price tapped this, and that's why it's starting to push up now. But the reason why, I already know this because we already know what's going to happen. Okay, it's in hindsight, but what I want to show you guys is the reason why this is coming back up here is because this is a weak high. We understand that it's a weak high. Okay, and what can we take as a weak high? We can take it as liquidity, right? So we can take this this whole thing as liquidity because it is a weak high. So when you're looking at this in the live market, you have your trading range, right? Sometimes I know it can be a little tricky because we literally just have to wait for price action to happen. We just have to watch how liquidity is building within a trading range. That's why we need to pay attention to it in the market. Now, we see that liquidity is building up within this trading range, and we know that for a fact that the trend is bearish. So if we know that the trend is bearish, we want to pay attention to weak highs and liquidity above that. So we can take this weak high as liquidity, and we know that price should take out this weak high and try to find a POI above that. So we know that there was probably a POI over here, which is why price reacted at this area and we got a little bit of a reaction, but it wasn't enough to break this previous low. So because we know that it wasn't enough to break this previous low, we know that there is a POI somewhere higher, which would probably be in this area. And like I said, a POI is literally just a zone. Okay, it's literally just a zone. Or you could really just place a sell limit right after liquidity clears right there. But other than that, it's just a zone. Or you can just take a sell limit. And then remember what I was talking about in the videos videos regarding the liquidity models is that we have a bunch of break and retest traders in the market right now. We have trendline traders in the market right now. So we have to keep those in mind, that everybody is pretty much entering or already entered the market right here, right? Because price also reacted at this area. So people are in their positions right here and they're waiting for price to break this low. But price is not going to break this low because we know that this is a weak high. So price will more than likely come back up, hit a POI above that. Why? Because liquidity is present, and what makes a POI high probable is the liquidity sitting beneath that, and price will react to a higher POI and then continue in its direction. So it's really simple, guys. Place your POI higher. And you can even place stops right here if you want. And then you would place it, you can even place it here because this is another logical area for a TP. You can place stops right here because we have equal lows sitting, or you could really just place that at the bottom of your trading range. Okay, you let this play out. Price hits it perfectly and it falls. Okay, so you see what I mean, guys? This is how you know that a POI is a high probable one, is because it all comes back to liquidity. So I hope that clears it up. I don't want to keep reiterating myself. Just continue to rewatch the videos on the liquidity models and continue to look at this in live market. Just wait and really react and see how price is moving within a trading range.